Nsu, already called Chartered. I'm your accounting tutor. In today's video, I'm going to introduce you into Introduction to Accounting, and the topic is Double Entry System of Bookkeeping. And Double Entry System of Bookkeeping, introduced by Luca Pacioli, have two basic principles. Number one principle is debit the receiver account and credit the giver account. While the supporting principle is any debit entry must have a corresponding credit entry and vice versa. The emphasis for the first principle is when we talk of debit, the account that receives, credit, the account that what gives. This is the emphasis. And here, any debit entry must, as you can see the capital letter here, must have a corresponding credit entry and vice versa. So we are going to use this very transaction here to trace or to explain this very principle as using the principle. So let's look at this transaction. Let's say on the 1st of April 2026, started business with cash of 50,000, bank balance of 40,000, and furniture worth 5,000. How can you post this transaction into the ledger account using double entry? Double entry simply means posting transaction into the ledger. Posting transaction into the ledger. And the ledger is something like this. I have debit and credit. Look at it, we have debit and credit. What is debit? Debit is to post a transaction or to record a transaction left hand side of the ledger, while credit means to post or to record a transaction in the right hand of the ledger. And then that is the principle we're going to stand on it strictly to make sure we understand how this transaction is going to be recorded in the ledger. Now let's look at the transaction once again. Started business with cash of 50,000. When you start business, it means you are putting money into the business, because the principle emphasizes the giver account and the receiver account. So in this transaction, what's the giver account? The giver account, we have three giver accounts here. We have number one, we have the cash. The owner is giving cash to the business, what is called business entity concept, where we say the business is different from the owner. Therefore, it means the owner is giving cash into the business so that the business will start. And secondly, the business is also giving a bank balance. The money he has in the bank is also given to the business so that the business will start. The bank is also the giver account, cash is there. And the business also, the owner is also giving furniture. Furniture means he can have any item like table or chair. He now decides to take it and put into the business. The value of the table becomes what he gives to the business. So we are saying cash is the giver account, bank is a giver account, and furniture is a giver account. Then what is the receiver account? The receiver account here becomes